Everybody in the audience, now listen to me carefully, is being given a special package, and I don't want you to open it. Do not open it. Cameras are on you, so do not open until I tell you.
So a market manipulation played out perfectly this week. Last Friday on the 24th, I posted a possible trade idea on YouTube. Please go and have a look at that video first before watching this one. The link should appear above in the right-hand corner of the screen. Also, kindly consider subscribing to this channel so that you don't miss out on any further videos. I appreciate all your support. It really helps me grow this channel. So this is what the market looks like when we leave the charts on Friday. So before the week begins and before the market opens, we already identified our zones. This is where prices might react in the future. And now, thanks to the economic calendar, we also have an idea of when we could expect some volatility in the market. For example, this pound trade we saw on the 30th, Thursday the 30th, that the Bank of England has its monetary policy and rate reports numbers to come out. So this usually moves the market. So now we have the where factor sorted out. This is our predetermined price action, where we could see some action in the future. And now also we have our when factor sorted out. So with the help of our calendar, it's a really powerful arsenal we have that we use on a day-to-day basis to our advantage in the market. Remember, sterling dropped on good news. Services and manufacturing numbers came out better than expected, but still the pound weakened across the board. But there was no justifying a 120 pip move down for the pound versus the dollar, or the pound versus the commodity currencies. But it did exactly that. It weakened. But my bullish view on the pound wasn't swayed by this. So I considered any pullbacks as buying opportunities. So if prices pulls back here, I'm buying. This was a pullback. In this area, I bought in that area and lost that first trade. And then it comes back down, respecting the predetermined line, and then started buying again. Here are a few articles which covers the central theme for economic news during the week. This is what many traders rely on to make an informed decision whether to go long or whether to go short on a specific currency pair. Yeah, the economists are saying that it is a difficult decision. They are facing a difficult decision whether to cut rates this month. Robert Hood, a chief economist of Bank of America, he says that he is opting for a rate cut this month. Then we have another economist, the chief economist at ING, and he believes that it would be better to hold rates. And then here on another article from the Deutsche Bank says that they're expecting a dovish meeting, and they're even going as far as to say what the amount of the rate cut is going to be. So they're saying it's going to be a 25 basis point cut for the rates. So for me, first of all, here it says it's a difficult question. Yeah, it's not difficult at all for me, really. The economic data has been very good for Britain, for both business and consumer confidence was up. The employment data surprised us to the upside. Okay, given the inflation missed its forecast, and I know inflation is one of the major reasons the economists were looking for a cut in the first place. But my issue is that we could see a rise in the next few months. We have the UK budget in March. I think the government might want to stimulate the economy and spend some money, and that would lift inflation, and then also the unemployment rate would go down. So for me, holding the interest rates made more sense. So, I mean, if they cut rates, then it would reduce the ammunition they had if the economy does actually slow down. Yeah. So for me, holding interest rates was the better idea. Also, I'm sure one of these economists would stand with me on that assumption. I mean, here we have two chiefs of one from Bank of America, the other one from ING. Then we have Deutsche Bank, and they differ in opinions. So my differing opinion is going to hold water with at least one of them. So I stood by my guns and held the view that the pound was strong. So during the week, if we zoom in now on the 15-minute chart, prices were hovering in and around this area at the same level for a few days. But as it's doing that, it creates numerous setups. Here's one here, here's another one here, and there's another one over there. So this year is when Oprah starts giving out our 1,000 pips, because all this information is known before the rates day. Yeah, it's known before the race day. And then this happens, 150 pips. So thanks a lot, Oprah, for that one. And then a similar market view can be seen for the pound across the board. The pound has performed especially well against the commodity currencies. So again, Oprah gives us, a couple of pips here, a few pips, because all of this information here again, this level and the timing of everything is known. It's known before the rate decision is made. Before this happens. That's nearly 500 pips on the pound versus the Aussie. And then another one here, the pound versus New Zealand dollar. If we come closer on the 15-minute on this one, we can even see that our beginner strategy is playing out perfectly. And this again is before the news comes out, and before anything, our levels are drawn in on our higher time frames, and we're zooming in on our 15-minute looking for this. We know when it's going to happen. We know where we could look for possible opportunities. So again, thanks to Oprah, it's another 500 pips there. So we don't have a crystal ball, and we can't tell the future. There's none of that here. But what we do have is a scheduled news event, so we know when we can expect something to happen. For next week, we know there's going to be the non-farm employment change, and we know this usually moves the market. And also at the same time, we have our CAD unemployment rate, so we know when we can expect some movement. So this is powerful information, and we use this every single day to help us make a decision. Like here we have again the euro versus dollar. We have our levels sorted out, so we know where we could expect some action, and then also thanks to the calendar now, we know when we can expect some action on the euro versus the dollar. And then probably a bigger move is going to be against the euro versus the CAD. So we have our levels all predetermined, and then also we know when we could possibly see some action. So if you want a closer look at how we actually do this, you can go and visit the Pure Trading website. There you can get access to free courses that can help you with this methodology to beat the market maker or to trade alongside with them. Thanks very much for watching, guys, and don't forget to trade safely and prosper.
All right, open your boxes. Open your boxes. 1, 2, 3.